Most people invest through stocks, savings accounts, or retirement funds. But billionaires often play a completely different financial game. One of the biggest tools they use is private equity, where money is invested directly into companies rather than simply buying shares on the public market. This gives wealthy investors the ability to influence businesses, restructure operations, scale growth, and generate massive long-term returns in ways ordinary investors rarely have access to. Today we will talk about how billionaires use private equity. So before we get started, make sure to hit that like button, also subscribe to my channel. 10. Most people invest in public markets. Billionaires often invest before companies ever go public. When ordinary people think about investing, they usually think about the stock market. They buy shares of companies already listed publicly and hope those businesses grow over time. But many billionaires operate in a completely different part of the financial world. Private equity. Private equity involves investing directly into private companies before they become publicly traded, or sometimes buying entire businesses outright. This allows wealthy investors to access opportunities long before ordinary investors ever see them. 9. Private equity is about ownership and control. One major reason billionaires love private equity is control. Public market investors usually own tiny percentages of companies and have almost no influence over operations. Private equity works differently. Large private investors often gain direct influence over business decisions, leadership, growth strategy, hiring, expansion plans, and financial structure. In some cases, they completely control the company. This creates enormous power, because billionaires are not only investing passively, they are actively shaping how businesses grow and operate. 8. Billionaires buy businesses most people ignore. Many private equity deals involve companies ordinary people rarely think about. Instead of chasing flashy technology trends publicly, private investors often buy boring but profitable businesses quietly. Manufacturing companies, logistics firms, healthcare providers, software infrastructure, industrial suppliers, waste management businesses, insurance firms, and service companies frequently attract private equity interest because they generate reliable cash flow. This surprises many people, because billionaires often care less about hype and more about predictable long-term profitability. 7. Leverage multiplies returns dramatically. One of the most important tools in private equity is leverage. Private equity firms frequently use borrowed money to acquire companies, meaning they control large businesses with less direct capital up front. If the business performs well and increases in value, returns on the original investment become magnified significantly. This strategy increases risk too. But wealthy investors use leverage carefully, because they understand how debt can accelerate wealth creation when attached to productive assets. This is one reason billionaires often grow wealth much faster than ordinary investors. They use financial structures most people never access directly. 6. Private equity focuses on long-term transformation. Public markets often reward short-term performance. Quarterly earnings, headlines, and daily stock movements create constant pressure on public companies. Private equity investors frequently operate differently. Because companies are private, investors can focus on long-term restructuring and operational improvement without public market pressure constantly interfering. This allows billionaire investors to optimize businesses over years, instead of chasing short-term market reactions. They may cut inefficiencies, improve systems, expand operations, restructure management, or reposition entire companies strategically, before eventually selling them later for massive profits. 5. Billionaires use private equity to buy cash flow. At the core of private equity is one simple goal: buying strong cash flow. Wealthy investors understand something many ordinary people miss. Consistent cash flow creates long-term financial power. Private equity firms often seek businesses producing reliable recurring income because predictable cash flow supports debt repayment, expansion, and long-term profitability. This is why billionaires frequently prioritize ownership of systems generating money continuously, rather than simply chasing speculative price appreciation. Cash flow creates stability. Ownership creates leverage. Together they create enormous wealth potential. 4. Private equity creates wealth before public investors arrive. One reason billionaires become even wealthier through private equity is timing. Public investors often enter companies after enormous growth already happened privately. Early-stage private investors may buy businesses when valuations are low, operations are inefficient, or growth potential is largely unrecognized publicly. If the company later expands dramatically, or eventually goes public, the value increase can become enormous. This is why so much modern wealth is created privately, before ordinary investors ever gain access through stock exchanges. 3. Billionaires think in terms of entire systems. Ordinary investors often think about individual stocks. Billionaires using private equity often think much larger. They analyze industries, supply chains, market positioning, infrastructure, consumer behavior, and long-term economic shifts. Instead of asking, "Will this stock go up?" they ask questions like, which industries are becoming essential? Which businesses control critical systems? Which companies generate reliable recurring revenue? Which sectors are fragmented and ready for consolidation? This systems-level thinking allows private equity investors to identify opportunities ordinary investors rarely even notice. 2. Private equity is deeply connected to power and influence. Another reason billionaires use private equity heavily is because ownership creates influence beyond money itself. Controlling businesses means controlling jobs, infrastructure, services, supply chains, technology, and economic activity. This influence compounds over time. Wealth creates access to better deals, stronger networks, more financing, and larger acquisition opportunities. Eventually, billionaire investors operate inside entirely different financial ecosystems than ordinary investors, because ownership itself expands future opportunity continuously. 1. The real reason billionaires use private equity, they buy and reshape ownership at scale. The deeper truth about private equity is that billionaires are not simply investing money. They are buying control of productive systems capable of generating enormous future cash flow and appreciation. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.